As promised, let's take you to the World Economic Forum in Davos. Bloomberg's Francine Lacqua is joined by Blackstone Chairman and CEO Steve Schwarzman. Fran?
Yeah, thank you so much, Alex. I'm really delighted to be here by joined here by Steve Schwarzman. It's day 4, so we're struggling to talk a little bit, Steve. I mean, it's been like nonstop this year because there's been so many people. The talk is, of course, about the conflicts, the impact that has on the economy. Are you confident about 2024?
Well, I think 2024 will be a good year. It'll start out slower in the sense that, interest rates are still pretty high, and the Fed will keep them that way. Everybody has their own guess, probably till the second half at some point in there. So that'll sort of have a little bit of sort of a baffling effect. Stock market had such a run in the fourth quarter that you wouldn't expect that to really take off and go, and the economy is slowing a bit. That's normal with high interest rates. So on the other side of the ledger, the expectation that interest rates are going down is creating animal spirits again. And we did, at Blackstone, we did 6 private equity investments in 6 weeks at the end of the year after a slow year. And we're much busier now. Yeah. In a way, it represents some type of capitulation for people who were holding back for 2 years. So we're optimistic. Yeah. For this year.
But Steve, are you worried that if actually we don't get those cuts promised by the Fed, because a lot of the good news is already priced in markets, that people will start waning on the deals a little bit? So for the moment, you're optimistic. Is second half of the year a little bit trickier?
We will get the cuts. Okay. Because the way we measure inflation at Blackstone, we're already right around the 2%. The fact that the Fed's using different numbers for rents and real estate, we think they're sort of looking at 6% inflation in rents and in residential real estate, and we're the largest owner of residential real estate. We think it's 0 to 1. Let's bet on us on this one because we're the people actually doing it. And if you correct the index for that difference between what's really going on and they're saying it's 6.2, you get around 2%. So I think I'm quite confident that they'll be lowering rates. Some people are like overly enthusiastic about when they do it. We don't really care when they do it. It's just the fact that we're going to go from a period of rising rates to a period of lowering rates.
So where do you see the best deals? Where do you think that the market is really ripe and kind of ready to go?
Well, there are different things. Data centers now are really interesting. Energy transition, that's more of a book value kind of thing because you're building things typically. And we've done extremely well in that area. We have healthcare types of things where you're inventing drugs through stage 3 trials. That's uncorrelated. We're looking at very interesting things in European real estate. Now, that's counter
I was going to say counterintuitive.
Right, counterintuitive. So there's always an actual reason why it's interesting, not an assertion. So the reason is that people who own real estate in Europe used to be paying almost nothing in interest because rates were negative for governments and even deposits. And now it's costing them about 500 basis points more to carry their positions. If you are highly leveraged, then you're having a lot of difficulty holding your positions, and and the actual underlying real estate isn't necessarily growing that much.
Right.
So the way out of this dilemma is to sell assets.
Yeah.
And there's hardly anybody in Europe who wants to buy them.
Yeah.
But at Blackstone, we're the largest owner of commercial real estate. We've got plenty of money. We want to buy that real estate, but only the good kinds of real estate, like the data centers, the warehouses, the student housing, which is all doing well. So what we normally do is tell them to go back and just bring us that stuff, and we'll buy all of it to give them liquidity. And we're finding that that's happening a lot, and that's creating things, because we only buy them at a price we think makes sense. So we now have not only willing sellers, but sellers who have to sell, and a very willing buyer. So we're going to create a lot of very interesting investments. So what you find, Francine, in almost every environment, if all you're doing is what everybody does, it's not so interesting. If you have different inputs, you can create things with very good rates of return.
How do you look at AI? So is AI something that's embedded in the future of what you're buying, or do you go straight for AI play?
There are certain types of things, when you look at them, you have to, as part of an analysis, say if AI was more developed, is that good or bad for this type of business? So there are certain types of businesses really not good for, certain types can really be improved. And so that's now on the checklist, if you will, for due diligence. And AI itself, and we've marshaled, almost all of our portfolio companies. I did a Zoom with all of them, all the CEOs, about 6 months ago. And I told them AI is no longer an elective course. This is core curriculum. And you're going to learn to love it. And the reason...
And understand it.
Well, understand it as best you can, and we'll help you. In effect, Blackstone parent. And a lot of companies, we embed data scientists to serve as a link. One of the things that we really want to do is make sure that every company has a plan, because if you don't and somebody else does, this is an area where if you're not the first mover and your competitor implements AI and they have bigger margins or more new products, then you're going to start losing your market share. And some people, some businesses who aren't in the game are going to be really adversely affected. And I explained to them, that can't be you. You don't want to oversee somebody else taking your market share and hurting your business. They all understand this.
Okay, this is a good thing. Steve, do you worry about liquidity crises in certain pockets? I know Carson Block was talking, for example, about BXMT.
No, not. We have, I think, 97% of loans paying, and we've done our own analysis on that, and we're not particularly concerned about that. In terms of liquidity, there'll be office buildings which will have that issue, although office buildings, particularly in the United States, as a rule, are a lot lower leveraged than they used to be when you were covering the global financial crisis. Then office buildings were 75 to 80% leverage. Now they're 55 to 60% leverage. So to the extent that those buildings get in trouble, there's much more equity in them. So this is going to be an unfortunate moment for the actual owners rather than just the banks.
Do you think private equity has a place in people's 401ks?
Oh, absolutely. Geez, we're selling a lot of money to private wealth. 25% of Blackstone's assets are to private wealth customers. So that's $250 billion. And, that is a little cyclical because private wealth customers sometimes get affected more than institutions when markets go down or there are threats of that type. On the other hand, there's $80 trillion with probably, that's a market opportunity, with probably only 2% penetrated. When I started in 1985, back in the Middle Ages, that's just the way institutions work. Institutions now are 25%. And the reason is you get much higher returns over time than the stock market, probably around 500, 600 basis points. You give up some liquidity, and now we're inventing new products that can be put into liquid form, if not daily liquid, periodic liquid. So you give up some liquidity, but you make a lot more money.
Steve, talk to me about the U.S. elections. So you've always had a candidate, and you're on the fence for the moment. Like, how will you make up your mind?
Well, all I do is read polls and media, and we've only had one election. And it wasn't even an election, it was a caucus. So I think, I'd like to see what the public thinks rather than what I think. So that'll take a little bit.
But is that because you want to back the winner, or because you want to see someone that could possibly beat Trump?
Well, I just want to see how the game plays. The world's complex with all of this presidential politics now. So I've always learned to trust my instincts. When I want to see more, I just want to see more. Obviously I'll make some decisions at some point, but this is the start of the game. For people who've been covering this like a blood sport, it's been going on for a year and a half already, but the actual game has just started.
But New Hampshire is a big one, right?
Excuse me?
New Hampshire is going to be interesting.
Yeah.
That's next week. But is there a chance that the Republican nominee is not Donald Trump?
Ask the pollsters. Ask the political experts.
You trust the pollsters?
You know what's amazing? Having had such a bad record in the 2020 elections, and even in the midterms, they got Iowa virtually identically to what happened. So Iowa's actually like a major victory for polling, as well as the winner.
See, we talk a lot about, what would happen to the economy, to domestic policies, to foreign policy under Donald Trump. What do you think will happen under, a second-term President Biden?
Well, we've seen a lot of that, and we've now got $2 trillion deficits with no end in sight. We've got our debt to GDP going up. We've got open borders with 8 million people coming over. I don't know that the country, frankly, is prepared for 4 more years of that, because those things all poll very negatively. So I can't really project what would happen.
But see, when the debt becomes an issue, would it be a failed treasury auction? Like, could there actually be a big financial event that makes people, wonder about the future of this?
Well, theoretically, usually financial crises come when you don't expect them. and they come quickly. I think we have a ways to go, in terms of people buying Treasury bills. I don't worry about that as a practical issue. You have a country like Japan, which, is like 250 to 300% of GDP. They're still there.
Yeah.
Now, most countries who have that situation self-finance. And the U.S. is dependent upon more global finance. So it would be good if we could get our financial house in order.
Steve, thank you so much for joining us today. That was, of course, Steve Schwarzman, Blackstone Chairman and Chief Executive.